Welcome back to the channel. I got a new camera, so we're going to be switching things up a little bit. In this video, we're going to cover how to profit off of free mints in this market. So first off, before we dive into the charts and look how to profit off of these moves, how are people finding these free mints and minting them in the first place? So it's actually very simple. I'm going to show you real quick. The pretty much two main tools to do this is either Icy Tools alerts, mint alerts, or Moby alerts. So personally, I use Icy Tools alerts. So if we hop into Azeroth, my alpha group, and we go to mint alerts, we can see that this is a channel that is showing all current and past mint alerts, including but not limited to Goblin Town NFTs. So as you can see, when the original Goblin Town was minting, we actually got several alerts in this channel saying, hey, this project is minting. Maybe you want to check it out. On top of that, we also got we're all gonna die alerts. So on the 3rd of this month, we got 2 alerts saying, hey, there's been this amount of mints in the past 5 minutes. This might be something you want to look at because a lot of wallets are minting this project. So basically all past, present, and future mints are going to this channel. It's the same exact thing with Moby alerts. However, if you are like me and you don't have a lot of time or you don't want to sit in this channel, that is where platforms like Icy Tools or NFT Nerds comes in handy. But if you want to be a true degen and just sit in these channels and mint a bunch of these for free and just pay gas, especially since GWE is relatively low, then there's not that much risk. And especially in this market, the current market sentiment with free mints, a lot of them are doing well. So you'll probably end up making money overall. You just got to make sure that you're doing it on burner wallets, and you just basically want to sit in these channels. And you'll notice we get alerts like every couple of minutes. So basically this is just an Icy Tools webhook. I pay for Icy Tools and I send the webhook to Azeroth to this channel so that everyone can see the current mints that are going on. And by the way, before we hop into the tools, I am making my own NFT trading platform. We have some incredible FANG engineers working on as we speak. Many of you can and will get access to the beta, so make sure to subscribe and stay tuned to find out more information soon. So going right into NFT Nerds or Icy Tools, I use both. It really doesn't matter, but let's go into NFT Nerds. It's the same exact data metrics for the most part: collections, trending. NFT Nerds, we go into trending. Basically what we want to do is the opposite of top-down analysis. So if you're familiar with technical analysis at all, you usually start at the top and you go down. Typically what I do for looking for these plays, I actually start at the very bottom. So typically the 1 minute or the 5 minute time frame. I see what's trending. Like for example, this begin as nothing, which is absolutely insane. While I was setting up this YouTube video and getting my settings for the new camera and everything, this dropped and it pumped from like 0.07 ETH, like literally an hour and a half ago, and it's pumped to 2 ETH. So it's absolutely insane. This was a free mint. Incredible. So it's super ironic that I missed this because I'm literally making a video showing you how to capitalize on these moves. Anyways, going back to the trending, this is a good example because we see it trending on the 5 minute time frame. So then I want to see, okay, is it trending on M15? It's trending on M15. Is it trending on the 1 hour time frame? Yes, it's top 1 on the 1 hour time frame. 4 hour time frame? Yes, it's trending on the 4 hour time frame. So even though it hasn't been out for 4 hours, basically what that's telling me is there's so much volume going into this collection that it's beating out all these other collections that have been around for days or hours or potentially even weeks. So basically what it means is a lot of people are really interested and they are willing to spend a lot of money on these NFTs, these tokens, which was a free mint token. So I think that the best way to show you guys this is to go into the calls that we made last week that ended up playing nicely. The first one for the most part was pretty much Goblin Girls. I'm pretty sure a lot of you are familiar with Goblin Girls. These were another free mint, basically saying your goblin needs a goblin girlfriend. These ended up pumping, let's see, well, when we got in around 0.03, they ended up pumping to 1 ETH, which was absolutely insane. I'm not sure why it's not showing any data right here. Here, let's check it out on Icy Tools. Okay, so on Icy Tools, it looks like it is showing the data. So basically where we got in right here in this range around 0.03, we ended up getting a pump up to 0.2. We ended up consolidating and bouncing off of 0.2 to around 0.1. And then we eventually broke out, retested 0.2, and we ended up going to 1 ETH. So this is a great example because for this type of play, this play didn't really have much to do with the charts other than the fact that it was a very low buy-in price and we were basically at the very low. So going into it, this was kind of more a complete degen play, playing off of Goblin Town. A lot of the goblin derivatives were pumping. This one definitely had the highest pump past 1 ETH for a goblin derivative. So the thing is, for this type of play at the time, it was trending. It was a play on the original Goblin Town collection and a play on the fact that all your goblins are going to need boyfriends. So the thing is, for this play, it was more of an intuition play. The fact that Goblin Town was sitting around 3, 4, 5 ETH at the time, a lot of people who missed the original Goblin wave who were priced out, they're probably going to start looking for derivatives like this. That is the next biggest thing that could pump. And we could see that because it was trending on Icy Tools and Nerds. So at the time when you go on the trending, then you can start to make those more calculated judgments like, will people be interested in this? Will this pump? At the time, yes, because this was one of the first derivatives that popped up. The art was similar to the original Goblin one, but it was for Goblin Girls. And it made sense that the goblins would need a goblin girlfriend, so to speak, and that people would probably FOMO into it for missing the Goblin Town wave. Now, going into baby goblins, this was another play that was really great. I think we bought in around 0.1 and we got out around 0.25-ish. So basically this was a similar play going around that similar story or trend with goblins, except this one we had chart data to back why this would be a good entry when we entered. So if we go to baby goblins and we go to the chart, and as you can see, these are absolutely dead now. So I'm going to make another big point on how you can make sure you're actually securing profits when you get into these plays, because there's no point if you got in here, then you hold through all this and you never sell your token, you're not banking any profits. What was the point of risking your money on the move anyway? So we'll talk about that in a second. Again, I don't know why NFT Nerds isn't showing this data all of a sudden, so we'll have to check it out on Icy Tools. All right, so it's definitely a little bit cleaner on Nerds. I prefer looking at Nerds, but since Nerds isn't showing the chart data, I'll just break down what I was seeing. So at the time we were floating around, we were here. So we made the call at 0.08 ETH. And the reason I made the call there and the reason I bought in is because we could see that there was a lot of accumulation. So a lot of orders happening around 0.05. And then we were getting a strong breakout. So when you're at these low levels, 0.05, 0.10, 0.15, 0.20, these are support and resistance levels. Psychologically, this is where price tends to hold or reject. So as soon as we broke out of that, this was where the second opportunity came in to scale into the position. So basically, if you didn't get in, or maybe you missed it or whatever it may be, this was a second chance to get in and ride the wave up to 0.25. And so basically, because these were trending, because these were following the story of the Goblin Town derivatives, and because a lot of these were getting bought up, what we could see here going into the charts and using the analytics to our advantage is seeing that there were a lot of rejections previously at 0.10, a lot of orders getting stuck around 0.10. So that shows us that there's a lot of resistance. Here we see a massive breakout. And then what do we get? We get a massive push up to 0.2. We get a retest. You can't really see it here. So I think I displayed this in my calls looking for that retest. Okay, so here you can see in this image right here, this is where we were having problems consolidating around 0.10. So you could see that we couldn't break this. All of the purple, these are like outliers. So these are more of the rare trades. We really want to be focusing on more of the green and the light blue. So once we finally got this breakout up to 0.2, 0.25, we ended up coming back, retracing this as normal. Typically, if we break a resistance, we're going to come back and retest it as support. So basically going into the next image, we can see that we retested 0.10 basically several times, 3 or 4 times before finding enough accumulation and distributing to 0.2 to 0.25 area. And that's where most of us got out. That's where I got out. And so that ties into also setting profits. And the reason I got out there, and actually I got out really early on Goblin Girls, I'll tell you right now, I did not ride that to 1 ETH, because what I do when I purchase these tokens, especially for these degen plays and mints, as soon as I buy the token, I set the sell, like I set the sell order. So the minute I buy it, I already list it at a certain price and I know, okay, I'm happy taking anywhere between a 2 to 5x depending on the price. So since my average price was around 0.11 ETH, I ended up setting all my sell orders around 0.24 and they all got liquidated because I think the floor ended up topping around 0.26. So I got out pretty nicely. But the point is, and this is just as important as getting into these plays, because if you're not taking profits, it doesn't matter how good of a trader or analyst or whatever you may be. If you're not taking profits, then you're not going to make any money. So you want to make sure that whenever you are getting into these plays, you take profits. Otherwise, you're just going to end up holding the bag. And look at how fast these dump. So a lot of times these dump faster than they pump. So you want to make sure you have your listings ready to go. Just take a quick 2, 3, maybe a 4x depending on the price. Like if you got it around like 0.006 or like 0.02, then yeah, you could probably take a 5 to 10x because that's different. But if you got in where I got in, which was around like the 0.11 area, then obviously I'm just looking for more of like a 2x because that's still like 0.12 to 0.15 ETH per token. So I'm going to go into one more play that we made this week, and then we're going to go into how to maximize your profits, how to use like a different exchange actually to get around paying high royalties. So this was Psychonauts. We got in around 0.05. It says that the floor price was 0.024, but it just wasn't updating. The real price was 0.05. These ended up pumping to around 0.2 or 0.25, but I ended up getting around 0.18, 0.19 on all my orders, scaling out as we went. So like 0.179, 0.189, 0.199. And that way I could just make sure that I'm still securing profits, but I'm making sure as soon as I bought those tokens, I was listing them so that if there was a pump to come, I made sure I got liquidated, because you never want to buy something, be asleep, the pump happens, you wake up and it's basically at your entry price or even worse below that. Another point worth mentioning is that for this particular play, I probably ended up taking an average of a 3 to 4x. And on a lot of these plays, as you get more confident and as you're obviously playing with profits, you really want to be playing with profits on these trades because they are still highly speculative. They are very risky. As you start playing with profits, what you can do to maximize your profits like I do and not worry about getting it at a high price is, instead of being like, let's say, I'm sure a couple people who took this trade, maybe they only bought one at 0.05 and then they sold it at 0.15. So maybe that's like 0.10 profit. Instead of buying just 1 or 2 of these tokens at like 0.05 and then hoping it goes to 0.25 to take profits and make 0.2 ETH each, imagine just buying 5 tokens at 0.05 and selling all 5 of those at 0.15. Yes, in the the beginning you carry a little bit more risk, but you didn't need the pump to happen all the way up to 0.25. If you just got up to 0.15, you actually ended up making 0.5 ETH versus holding 2 tokens from 0.05 to 0.25 and making 0.4 ETH. So that's another big thing. It's not always about buying at point A to point B. A lot of time it's about how much you accumulated at point A and how many tokens you're able to sell between point A and point B to maximize those profits. So I know a lot of really good traders in the space, such as Nate Rivers or Sneaky Ninja Pants. That's a lot of times what they do. They're acquiring a bunch of tokens and then they're selling them in bulk. We're not really looking for a moon play. Sometimes we are, but a lot of times from a probabilistic perspective, it's not gonna 10, 20x from like 0.1 ETH. So a lot of times it makes more sense just to buy like 5 or 10 tokens and get a 2x out of it instead of buying like one token and hoping it hits like 0.5 or 0.6 ETH. So hopefully that makes sense. And then lastly, we did make one more play. I think this is worth mentioning because although it did end up pumping to 0.15, I did not get liquidated and I actually took a loss on this play. So I think this is a good point to bring up. You're not going to win every trade at the end of the day. All of these trades are based on probabilities. You just want to make sure that you're playing with profits and you're not spending all of your profits on one move. So like all the profits I made on all those other trades, it's not like I'm putting all those profits into this type of play. I'm putting a small percentage of those profits to play with to make more profits. So that's just something to take note. You know, you're not going to win every single trade. You want to make sure you're playing with a percentage of your profits and you're not burning more money than you're making. Now, with that being said, going into X2Y2, what you can do to also maximize your profits, which I've been doing, and I actually did this with PXN. So I sold a PXN for 4.4 ETH, one of my tokens on X2Y2 because PXN, the team, they forgot to set royalties. And so I walked away with 4.38 in profit. So I only paid 0.02 ETH in royalties simply because at the moment on X2Y2, there is a 0.5% trading fee. So if we hop onto a trending collection, we look at Grimbogs by Bedbugs, for example, and we go into info, you can see that they have forgotten to set the creator fee. So basically there is 0 royalties. If you made a sale, all you would pay is 0.05%. Now, if we go to Grimbogs and we go to their OpenSea, I'm sure that they didn't forget to set the royalties here. So on OpenSea, you'd actually be paying 5% plus OpenSea is 2.5%. So you'd be paying 7.5% total. So a lot of the times for a lot of these mints, they're happening so quickly that the creators forget to set the fees. And so actually all those trades that I talked about, except for Goblin Girls, I sold on X2Y2, including Goblin Kids and Psychonauts. So I sold all these on X2Y2 because they forgot to set the creator fees and I ended up saving like a good percentage in royalties. And lastly, because this video is already getting pretty long, how do you determine once a collection is trending, whether or not it's a good idea to get into that? I kind of already talked about it going from the bottom to the top, seeing where it's trending and seeing if the volume is adding up on the higher time frames, because even if it's only been out for 15 minutes, but it's showing up on the 4-hour or the 1 day, that's how you know that there's a lot of volume, which means there's a lot of interested buyers. So basically, once you see that, you want to go into the charts, whether you're on NFT Nerds or Icy Tools. And whenever we're starting out, or if you catch the play late, like I do sometimes, but you're just still looking to make profit, I can already see a play right here. You can see that we have this, again, major level of resistance at 0.10. It's not showing, but you can clearly see the mid level right here is 0.10. Look at how long and hard it took to break this. But as soon as we broke it, we had a strong breakout. We retested 0.10. We retested it again. So this would be those entries that I'm talking about where you combine all of it. You look at what's trending, you look at how much volume there is, and then you go on the charts, you look for areas of support and resistance, and you basically want to see the most high probability entry areas that you can take for as minimal risk as possible to eventually make profit. So basically here you can see we kept bouncing off 0.1, rejection, 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 rejection. We finally broke out. Usually when we break out, it's quite strong. We got a retest here, went back to 0.20, rejected again, retested 0.1 again, and then same thing here, right? Now we're testing 0.2 as resistance and so on and so forth. So basically you want to combine all of what I am talking about. You want to combine what's trending. You want to combine the story. You want to combine the volume, and you want to combine the analytics, the data, and of course going into live view and also using something like floor walls to your advantage to see where all the listings are, where you should be listing. So you make sure, for instance, you probably wouldn't want to list at 0.5 because once you get to 0.5, there's 105 listings versus at 0.49, there's only 35. So I will definitely do more in-depth videos on technical analysis later and reading chart data. But as far as everything I just talked about, it might seem a bit complicated, but really it's not that complicated. It's simply about understanding what the current market sentiment is. Like, what are people going crazy over? Are they going crazy over AI? Are they going crazy over goblins? Is there a lot of volume? Is it trending? Do people want it? And then it's simply making those decisions to buy in at areas of high probability. Once you have all the information and you put it together, then you look for areas that make sense to actually enter on that are going to be low risk and higher reward. So like these areas where price is already pumped and it's coming back down, you always, of course, want to buy the dips. All right, hopefully you guys learned something. I will definitely do more in-depth chart analysis later, especially when we get this platform up and running. I will definitely be doing live streams. I'll be doing my own version of alpha calls and stuff like that. So make sure to subscribe if you learned something and stay tuned for what's to come. I will catch you guys in the next video. Thanks for sticking around. Peace out.